Hello, traders. Because of income coming to you from theclosingprint.com, October 22nd, 2023. In Friday's expiration, a lot of put-heavy gamma expired, which could lead to a follow-through bounce and more of a bullish trend to start the week. As that put gamma drops off, it gives the dealers an opportunity to rehedge and for market participants to rethink their sentiment as we head into a week of big cap tech earnings and the expectations therein. Everyone knows the markets moved lower last week. The S&P 500 closing just below its 200-period moving average, MACD and stochastics resetting with 4 distribution days last week as we rolled into a Friday put-heavy expiration, along with a couple of tests of the 10-year 5% level off of a third day in a row of heavy equity selling. At this point, it's becoming difficult to tell which has a more powerful influence, the natural mechanical effect of strongly negative gamma, or the combination of institutional awareness and a fear of negative gamma. So at this point, we're watching the indices and all of our indicators, which are mostly bearish at 15. 3 are neutral and 2 are bullish. Going into the week, we're going to start with a bit of caution and look for options to fill in after that OPEX on Friday. For now, we start off the week with a red signal on VIX. It's at highs. When we have a red signal, we're looking for lower lows and lower highs. As we look for VIX to reverse off of these extremes that we saw back in May and in June, where at the same time we'd be looking for the 10-year and for event premium to back off, since the whole reason why this started to rise into the weekend was the ongoing conflict in the Middle East and the negative gamma, which has seemed to have run its course and will likely give us a good answer on Monday. If we do get a bounce, look for MACD and stochastics to turn up. We'll be doing the same and let you know during the live feed. For now, we'll start off the week with a bit of caution and wait for institutions to tell us what to do after about 10 o'clock on Monday. Small caps moving back into the lower part of its range it's been in since 2022. More than likely a bit oversold. We're looking for a turn and a bounce. We did have 3 weeks of distribution, so we're looking for that to calm down and looking for a bounce in small caps. Small cap financials, biotechs, and energy in particular, with plenty of reasons to stay cautious. On Monday, we have growth and value, both pulling back below their 21 EMA. Lends to a potential bounce in the short term, as those dealers will now be able to rehedge and options will fill in this week. With the S&P equal weight index moving back into the March low and the number of stocks trading above their 50-day failing and reversing, we're looking for this double bottom, if you will. Reversal potentially, since OPEX is behind us now. We're looking for November and December to give us a more bullish tailwind. That said, we need to see what happens this week with the number of stocks above the 50 and the 200-day, 200-day on the lower panel. All 3 of these need to turn back up, and we need to hold this level. Looking for this channel to hold and price to regain its footing and move higher into this week. If that doesn't happen, we'll just add to our hedges like DOG, the ProShares short Dow 30, in addition to bearish ETFs like DRV, the real estate 3x shares bear, which saw a lot of activity last week. These could reverse, but if you're thinking about hedging, consider these first. QID making a nice move here, higher highs, higher lows, looking for a higher high if the markets do pull back on Monday. Small caps, RWM or TZA, and SPXU or SPXS for the S&P 500. SQQQ for the Qs, seen a lot of activity on Wednesday, Thursday, Friday. The biggest issues of late has been the persistent trend in the 10-year yield reaching 5% last week, along with a bearish trend in junk bonds and high yield corporate debt nearing a support level that we saw back in May. Also, IWM and IBB biotechs risk off for now, while we did see some activity and potential bullish sentiment on Bitcoin, as the idea that a spot Bitcoin ETF would be approved in the short term. A lot of talk about grayscale leading to early buyers in Bitcoin. That's something that we'll be paying attention to this week. We do have advanced decline moving below short-term moving averages, so we need to see that turn back up as well. Overall, with the markets at bearish extremes, we're looking for a bounce to start the week. In addition, there was a lot of talk about TLT and all the calls that were being bought at the lows. Many believe that we're going to start to see a reversal in the 10-year and TLT moving in opposite directions, with TLT moving higher. With the implied volatility in TLT call options, it makes sense to potentially put on a buy TLT, sell the calls, and look for higher prices while looking for a reversal in the short term. We're also watching the US dollar. These lower highs on RSI up above corresponding to pullbacks in the dollar. We'd like to see a pullback in the dollar. That would help the growth stocks after the selling that we saw Wednesday, Thursday, Friday into OPEX. In addition, we do see the gold, silver safety trade continue. As inflation remains persistent, we're seeing a bid in gold that lasted for the last couple of weeks. Also due to what's going on in the Middle East, while economically sensitive commodities like copper remain in a bearish trend, and commodities remain in a bullish trend. What does this all mean? It means that you need to be cautious, collect cash, and wait for the markets to give us a clear direction before putting money to work, whether you're day trading or investing in the current environment. Sectors have deteriorated over the last couple of weeks, perhaps changing direction. We need to see it first. For now, caution, whether you're trading U.S. or international ETFs, with all sectors below their 9, 21, and 50-day moving averages except for energy, and an extremely oversold utilities sector, which is getting a lot of press about a potential reversal. Especially if yields start to back off, people will start buying the utilities for their dividends and interest. Starting off the week, there's very few stocks on the IBD 50 or stocks from their relative strength at new highs scan. The bullish scan did have some exceptions. Look for stocks like Roblox to follow through this week. As the stock continues to make higher highs and higher lows, volume picked up on Thursday and Friday, showing relative strength as the markets were moving lower. Roblox was moving higher, RSI moving to the upside. It's in this Kirby area here too, where price action should meet little or less resistance up until about the 3370 level, which lines up with the 100 period moving average. Above that's the 200 day. So you might have about a 10% move, 15% move from here, starting on Monday, if we get a follow-through to start the week. Abbott Labs and some of the pharmaceuticals and therapeutics companies in the healthcare sector started to see some follow-through. There was some talk about Abbott Labs last week on Wednesday. We had this reversal, move back up towards the 50-day. Watch Abbott Labs. This might follow through. RSI is rising. Stochastics and MACD are pointing higher from oversold conditions, giving you a tailwind going into Monday trading. Core Civic, relatively inexpensive stock, had a lot of volume on Wednesday, Thursday. Relative strength to the markets as the markets were moving lower. This was trending and moving higher. Didn't lose the 21-day. Look for a breakout. It has an ATR of about 30 cents a day, so it's not a big mover. If you're considering stocks that have relative strength, this one works out pretty well. With all the hoopla about sugary foods and junk food in general, McDonald's took a beating over the last few weeks. It started seeing some volume coming in early last week, looking like we might see a follow through. Stocks like Wendy's also had some similar activity. Look for these to continue as all of the hoopla over Ozempic and other obesity drugs has faded. Novo Nordisk fading, trapping all of the chasers into the highs. We'll see how far this pulls back, along with Lilly, which saw a similar fade, but still trending. Look for a push down to the 50-day on Lilly, and then for stochastics and MACD to reset. Right now, there's just a little bit of selling. So let's wait for the markets to tell us what to do on these two, Novo Nordisk and Eli Lilly. Other stocks that showed up on scans that find high volume, Summit Materials, looking for a follow through. Nice bounce on Friday at the 50-day moving average. Volume shows institutions have been buying. Looking for MACD to continue higher and stochastics to turn. RSI is above 50, showing there's potential institutional interest, while looking for this to push about 10 or 15% higher back to 52-week highs. A relatively inexpensive stock, John Wiley & Sons. You might know that if you actually read books. Looking for a bounce here, double bottom, volume starting to pick up. Stochastics and MACD pointing higher. RSI headed towards 50. Maybe there's something here. About 10% upside potentially. Back to the 200-day on John Wiley & Sons. Good RX with their coupons and discounts to pharmaceuticals when you go out there and get your drugs. Looking for this to push a bit higher too, coming off a low. Looking for a higher high through the 200-day. RSI rising. GDRX potentially seeing some buyers that want this to be moving higher over the short term. Autoliv, however it's pronounced, is seeing a lot of activity. This produces airbags and assorted products for the automotive industry. Volume picking up on Friday. Stochastics MACD turning. What caught our attention was the volume and this big bullish candle on Friday. Relative strength when the markets were pulling back, RSI is rising. That indicates institutions are probably picking up shares. Watch for ALV to continue higher. Okay, traders, that's going to do it for me. This is Cousin Vinny coming to you from theclosingprint.com with your weekend video newsletter for Sunday the 22nd. I'll send out a watch list of stocks that look good for a follow-through, which I'm anticipating will be a bit smaller just given the current market sentiment. We need to see Monday and Tuesday progress before we take on additional risk. At this point, I'm more interested in collecting cash. If the markets start to take off on Monday and Tuesday because of the OPEX and the dealers rehedging, we'll see those options fill in and we'll let you know during the week. So look for that watch list at around 12 o'clock midnight on the East Coast, around 9 o'clock on the West Coast, and enjoy the rest of your weekend. Check out the stocks that are down below. These have been scanned already. There's some promise here, but again, waiting for Monday and Tuesday to get a true sense of how we can proceed into the seasonally strongest months of the year, November and December. Take care. We'll see you in the morning. Ciao.